One sec, guys. What a day, I gotta say. Right now I was kind of just watching Meta right now. I was kind of anticipating once I saw at the end of the day here. I kind of saw this little bear setup that was forming on Meta into the end of the day there. And those of you that kind of know the patterns that I kind of like, I typically like looking at descending broadening wedges. But Meta basically set up an ascending broadening wedge, which is basically your opposite. It's a bearish pattern, and therefore that's why you see it's pretty much down about 5-6%. And I'm also probably safe bet to say that probably Twitter and Snap is also rolling over with it. All right. What's going on, T? What's up, Renee? Qualcomm also dropped too. Oh, that's not good for semis. Let's take a quick peep at that. Yeah, that's not pretty. It was actually looking like it was gonna kind of break out here. As you can see, you kind of look like you had a nice little bull flag here, right at the top of this little resistance here, and then she kind of just pulled the rug on you. So I would kind of say that this is going to end up pulling back. I think you have a little bit of a decent floor here on this 146, but not too promising to say that it's going to necessarily hold. But 146 will likely be that level just to keep in mind. You pretty much break below 146 here, and then we have a landslide. Pretty much comes in closing in a 141 here. So under 146, if that can hold, then 141 is likely the next level. But it looks like it's trying to do some holding here, but probably that earnings call is going to have a lot to do with that. I assume that probably AMD also dropped here on the back end of that. Little bit of weakness on AMD. Nvidia, wouldn't doubt it. Yeah, so some relative weakness on some chip names. I know that we also have Lam Research speaking about that. I don't know if they've actually reported. They're still relatively flat, so that's one to also keep an eye on here this afternoon. So I'll see if I have any attention on that one here shortly. But we'll see how that one pretty much reacts as well. Other than that, though, kind of getting back to today's price action. What a astonishing day, I gotta say. That was. I want to say that the price action that we actually got off of that vertical movement on the end of FOMC there, I guess that was literally right when Powell started to talk. That was literally just a vertical action that I was hoping didn't happen. Like overall, I was still neutral to bullish on the overall market, but I wanted to see that kind of snapback, that kind of vertical action going into tomorrow during market hours. I was not necessarily expecting that to pretty much just be vertical off the bat. I wanted that kind of dip and rip scenario, just because of the fact that we seem to have ripped off of basically almost every FOMC that there has been already. I was hoping for the opposite to happen. It was not the case. The other thing was pretty much that once it started going vertical, I think it was literally to get your fill that you particularly wanted, in which I'm usually a person that I like to lowball my fills. That was literally just insane type of price action to get a decent fill. You literally had to go at a market fill. That's literally what it ended up causing me having to do was a market fill, and then just looking to pretty much lock in those 20-25% on that quick spike. So beautiful day overall. We did go right into resistance. I know that I heard Tom pretty much at the end of the day talking about profit taking. We basically smacked our resistance up here at this what roughly around this 40-42 level on ES here, and then you saw that decent sized pullback. So what am I going to look at for tomorrow? I'm basically looking for pretty much a halfway back, which is basically our impulse from our last dip of yesterday around, what is this, from yesterday afternoon, which is roughly right around close yesterday, where we pretty much tried to find a bottom of 39.14 up until today's high. I'm looking for your halfway back. A nice little zone here. I'm looking at 39.80 to 39.89 to hold tomorrow for for this bullish uptrend to pretty much continue. Otherwise, if we end up losing 39.80 tomorrow, and we also do have GDP data tomorrow morning as well, which is going to be our probably our catalyst to really give us a directional move for the day, then if we end up losing 39.80, which will likely be possibly by the morning if we are bearish, then we're likely looking at pretty much retracing all of this action to basically go back to yesterday's low where we pretty much launched off of. All right. So we're basically looking at retesting back to this 39.14 if we can hold 39.80 tomorrow by the opening bell. So that's what I'm going to look at. Otherwise, if we do get continuation, we're able to hold this 39.89, 39.80 here, this halfway back, then I'm looking to basically take out today's high that we ended up having. And I have a little bit of a supply zone that's sitting right between 40.67 up until 40.73 is what I'm looking at for our overhead supply, in which we kind of see, I want to say that last leg up per se. I think that's where we're likely going to end up finding our top, and we pretty much run our heads right into Amazon and Apple's earnings, which we'll see if that ends up being the catalyst for this downfall, or if it's necessarily earlier than that, and we see GDP kind of be our downfall. All right. Other than that, though, I think everything just kind of giving us strong rips. I think not too much that's on the watch list right now, just because of having a catalyst and we can go either direction after such a strong rip. One thing that kind of stood out to me, and I'm sure everyone kind of was aware of this one, was looking at Boeing. That was literally like a finesse type of move that they ended up pulling. We saw it showing some early strength earlier on at the opening bell. It ended up giving us nice little rug pull. I did see some relative news that probably came out like late morning that ended up causing this to pretty much give us that rug pull. But as you see, the more important part is that you see this nice ascending channel action. We basically broke below the ascending channel action. And so I'm going to watch for this one, particularly for a short entry on this. If we can get this one below 153 here, I do think we have a good shot at filling a gap fill here under 148.97. And that's what I'm going to look at. So nearly about close enough to a $4 move, you could say, if she breaks under 153 tomorrow. And when Boeing typically starts to bleed, it's usually a beauty because you don't typically get much of a bounce out of Boeing as compared to something that's like volatile as a Tesla. You know that one bounce on Tesla can pretty much just destroy your premiums. No, when Boeing usually bleeds, it's usually a quick move and it ends up being very fast, so you can pretty much get in and be out. All right, so I'll keep an eye on that one under 153. Kind of just glancing back at Meta, you're getting a little bit of a bounce back. Not too much. I basically had a nice little descending channeling action from where we basically last ended up having our massive gap down, you want to say. And so I'm going to look for that support here. Support that you're relatively looking for tomorrow morning is at 159. So we'll see how much more this ends up bleeding out. I would anticipate this can actually, in fact, open up at that support of 159 if we have bad GDP and the market rolls over pre-market. So that's something I'm going to keep an eye on. In which case, if we end up getting down to 159 here by opening bell, then it's more than likely we can see a nice little bounce before we get the flush and we break this trendline support. So that's something I'm going to keep an eye on. But I guess the key level to pretty much keep in the back of your mind is 159 here. 159 is going to be that level you want to see if it opens a support. Maybe you end up playing the bounce off of that to the upside, or you just wait for the bounce and then you particularly look to short it here, which is roughly holding a little bit of a support level at this 164. So that's pretty much what I'll keep an eye on. But 159 again, mental number. That's what you want to keep in mind. Microsoft, what a monster this was. I came on live yesterday and I said pretty much keep an eye relatively on the names that ended up having earnings yesterday, and that was Google and Microsoft. What a continuation they gave us today. And I think I told you guys with all the names that actually had relative earnings this week that you didn't want to get caught in all those premium spikes. Google and Microsoft were kind of literally the two plays. That's all you practically needed today. So those two are monsters. I do think you have a little bit of supply that you're likely going to smack your head on if we do get any kind of continuation here on Microsoft. And that's right around this 272 level. Kind of anchors off of where our low is from February 24th, where we had our breakdown that dates back to May 11th, and then where we also rolled over to make a new low from June 10th. So 272, that's the key mental level there as well. That's where I would expect to see your overhead supply, where we would if we get any kind of upward action tomorrow morning, that's likely where you're going to see Microsoft fade at that 272 mark. All right. So that's one I'll continue to keep an eye on. One that I was watching, I think, since like basically yesterday was AMD. You kind of have a nice little inverted head and shoulders action that's kind of playing out here. I was watching it yesterday, picking up pretty much calls under 85 here. I didn't pull the trigger, which I kind of wish I did. But I did get in that earlier on once the market kind of opened, so I didn't feel too bad that I missed it yesterday. But you do have a nice little inverted head and shoulders type of action. You do have a nice gap fill. That's something that's pretty much on my watch. But 91 is the level that you're watching here. That's pretty much where your resistance is, relatively to where your neckline is as well on this inverted head and shoulders. So I'm expecting if we get any kind of upside here on AMD, maybe it'd be a gap up of some sort. Look for 91 to pretty much be faded, and we probably get another rounding bottom action leading right into our earnings due on August 3rd, and that's probably going to put us right back at the neckline. And earnings will decide whether we get a breakout of the inverted head and shoulders or we end up failing and we break down. So 91 is that key level there on AMD. Other than that, I don't think there's anything else too much on my watch list. You could probably look at Apple here. Apple's just been a monster. But I do actually have some supply here, close enough to 159.5. Is where I would say is my supply roughly, where I think we can extend to. My only concern with Apple more so is that I think we can extend up to that 159, probably wick 160 to be honest with you. But I think that's actually gonna honestly happen during earnings, and then we'll probably see it be faded pretty quickly by the next morning. So that's when I'm not too pretty much confident in terms of how much more room there is in terms of that earnings run up. But I do have this likely smacking 159 half, 160, and we probably see that fade pretty quickly. All right. Can I look at ATVA ticker? I bought AMTD and it took a nosedive. Let's take a peep. ATVA, you said? Let's take a peep at it. All right, I think you mentioned AMTD was the ticker. Ameritrade? Is this? Oh no, this is a penny stock. Okay, take that back. AMTD just sounded like it was Ameritrade. Um, phew. Okay, so assuming that you pretty much bought somewhere when this started to pretty much pull back is what I'm assuming, Renee. And then you pretty much got caught in the rest of the nosedive action. Is that what's basically happened to you? I'm assuming that. What I would basically look at is kind of the level that just stands out from hindsight here. I would look to pretty much try to tough it out here, but you would likely end up smacking your head at 1.35. That's likely the level where you're going to end up looking for some support here. You can basically see that you had prior distribution here dating back to most of the third week of May up until the second week of June, and you ended up holding that 135 level as basically your support through that entire distribution before making a new low. So I would expect that to pretty much retest as a support. Now the question is how long that support is going to end up holding. That's the question mark. So I would say whatever kind of decent bounce you get off of 135, you look to pretty much start to scale out once you start to get the bounce off of that, because you're likely going to end up probably smacking your head on some resistance above, right around what I would say is this level right here, where you kind of see a little bit of after hours action. But right around this 151 here is where I would expect you to basically hit your head on resistance. And you're going to need to see this pretty much break north of 151, or it's going to reject by morning and it's going to come back down to 135. All right. You bought at 219, hoping to go to 279. Oof, that's tough. All right, so you basically bought 219. I'm assuming that I'm hoping that you probably bought it on the way down, rather than getting caught on that pump on the way up. But either way, kind of the zone that you're sitting in right now is tough. I think those two key levels that I kind of mentioned there, 151 and then 1.35, that's pretty much the two key levels that you're watching right now. I'm hard pressed to say that you're really going to be able to get back to where you bought it at. I'm really hard pressed to say that. That faded pretty quickly. If you can get a nice strong move out of over 151 here, bigger level, get your breakout back over 1.71, then we can start to talk about getting back to your entry point. And I would say honestly, try to cut your loss depending how sizable your position is, and that's when you'll decide once you get close enough towards 180, 190, if you can basically get a break over 1.71. All right. But that's a tough one. Penny stocks are definitely tough. That's where you have to be quick in and out on those. Unless you're really buying at an absolute bottom where you look like here, you're kind of basing. That's tough. That's really tough when you're trying to get in on those quick pumps. And Lobo, what's going on? I don't know what you're talking about, my guy. I have no idea what you're talking about. Kind of just want to glance back though. Real quick, how's Meta doing? Is she holding? Wow, what a recovery out of Meta. I'm actually pretty impressed. I'm really impressed that this ended up holding up. My resistance I was watching is 171.30 on Meta. I was not expecting it to necessarily go past that per se, just because of the fact that it was pretty much a bearish pattern. But if she ends up holding out, it's going to be interesting to see if she actually goes red to green by morning. And maybe some analyst upgrades come through and we see this start to pump tomorrow. But she had a hell of a run up into earnings. And I got to say, a lot of these earnings run ups came pretty darn late and some massive moves right before the earnings. Like looking at yesterday at Microsoft, I would not have expected that we would pretty much, we had a nice pump into the earnings, and then we basically had a strong move out of the earnings also. So that was an insane kind of price action today. To see us up about $17, I don't remember the last time we really saw it that much. But I think that was probably what maybe one or two occasions within the past year that this has actually made this much of a strong move like that, up 6.5% to almost 7%. So that was pretty much definitely a crazy move to see. Annette, gotta do the daily Tesla too, please. Let me take a look at Tesla for you real quick. Tesla's in an interesting spot. To be honest with you, my overall PT on Tesla was still making a move up towards 886. Now, granted the fact that we see such a broader move, no escalation to the upside, and Tesla not necessarily holding as well as I expected off of its prior high dating back to the 22nd. I'm a little bit hard pressed to say that we're going to get up towards 886. I think our best case scenario right now is pretty much breaking north of 828. We saw that we kind of smacked our head for most of the part of the afternoon after FOMC. We kept teetering up between 825 to 826 today. So I need to see a convincing break over 828. We get a move over 828, then we can start talking about this high from June 22nd here, which is at 842.36, and then I will start to pretty much target gap fill. And my overall resistance that I'm looking at for pretty much our downfall here, basically, will be right around this 872 spot is what I'm looking at in terms of where our potential upside is if we do get continuation above gap fill. So 872 is pretty much the level I'm watching for. Otherwise, if we can't pretty much get over that 828 level tomorrow, we're gonna start to see this pretty much fade right back under. Some key levels to pretty much keep in mind for the downside here is pretty much watching this 817 mark. 817, below 817, I have a little bit of resistance around 807, 802, and then that's when it starts to get ugly. The other thing was that we did have quite a bit of some puts that rolled in on Tesla after FOMC minutes came out. Now I'm sure that they're probably most of them are relatively down right now, but we had some Nimbus puts that came through, some level 2 puts that came through for like 800 strike for this week. So it's going to be interesting to see if we end up retesting that 800 level, and if we end up breaking down below 800, that gap fill below here that's sitting under, what is this level, under 785, is going to start to get interesting towards the end of the week here. I believe Tom also pointed out an interesting fact, which kind of caught my attention as well, is that I think the past few FOMCs that we've had that we basically ripped off of, being an immediate reaction, the following 2 days we've actually had pretty much a rollover in the market. So that's just something that's kind of in the back of my mind. Am I being pretty much biased towards that happening? No, I'm not. Definitely not happening, because I think Apple and Amazon tomorrow afternoon, their earnings are going to have a lot to say about the market pretty much holding up or if it's going to end up rolling over. All right. So it seems like Tesla is in a cup formation, so pullback will complete the handle. It definitely looks like that. I'll be honest with you. Now, it could definitely be the case that we end up pulling back to pretty much fill this larger degree gap, and that depends pretty much how steep of a pullback we have if that handle is to play out. Now, that being the case, then I would look to pretty much basically pull back to what would be a halfway retracement of my little descending channeling action. If you kind of look at that, I would basically look to pull back towards around 738 if we do get, and it may actually end up playing out to be our 2 day rollover. As it's Tom was kind of saying after FOMC, it may be the case if we do roll over pretty strong, then we could be looking at the halfway back here at 738, and that could be potentially what would set up for your handle for that cup and handle formation that you're referring to. Otherwise, if we end up breaking below 738, then I think that's going to likely invalidate that handle. But it is a little bit of a stretch. I don't see Tesla really getting a cup and handle, because then we're going to start talking about this literally ripping over 900, and I don't see how that ends up happening necessarily. But 886 was my target originally, so if it ends up dipping down to 738 by the end of the week here, and then we could potentially see this play out towards next week, and that kind of carries us right back up to the upside here. I wouldn't mind that at all. So 738 would be our halfway mark. I think that's the level that you particularly be watching if we were looking for to pretty much try and time the bottom of that handle per se. But I see where you're pretty much getting at with that. Other than that, I was gonna glance back also, pretty much see has Qualcomm done any more damage. So Qualcomm is still pretty much staying down heavily. So we'll see how this one ends up playing out. You have a tiny little gap fill down here, right around this 142 level. That's something that's maybe notable tomorrow if Qualcomm and the semis in general can't hold up with the broader market on the back end of GDP data tomorrow. I think that gap fill below may be actually pretty promising to play that to the downside here. As I kind of highlight that for you guys. That 142 gap fill is going to be pretty interesting tomorrow to the downside to be actionable. So I would keep an eye on that one. Otherwise, Meta, I think that one's still kind of relatively trying to snap back. I think that they're waiting a little bit for probably some more information on the earnings call. So I think that's a little bit more of a wait and see approach tomorrow. But I'm sure by morning you'll likely see if there's more weakness to pretty much play down to the gap fill that's sitting here. Gap fill under 162. I kind of also said that that support is also sitting right around that 162. But 159 is pretty much where you have your trendline support to break this pattern to the downside, as it is relatively a bearish pattern of a ascending broadening wedge. So I'm going to look for that breakdown more so under 159. I think that's going to be more so the actionable play from my perspective. Otherwise, you could play the actionable move if we relatively hold up, and as long as we stay under 171 here, I think you could target the gap fill pretty easily. All right. Let's see what else. Annette, you'll watch for it. That's a good thing. SIDS is market pricing and GDP numbers as well, or that will that be a surprise? I think that's going to be a surprise. Right now, I don't think there's anything that kind of says that GDP is really going to sway us one direction or the other. I think it's likely going to take the market a little bit by surprise. Powell did everything in his power to pretty much give the market what it wanted to hear today. Pretty much talking about the balance sheet, pretty much relatively being under control as they basically steadily increase rate hike. So he gave the market what they want to hear. So that was pretty much just a compelling part. Now, earnings run ups, all of this earnings pretty much being positive and actually good on the back end and holding the market up relatively. I don't think there's any kind of pricing in for GDP. So if that number ends up being as bad as we kind of expected, to be, then it's likely that may end up being the trigger. And that's usually what it takes. It's usually either some kind of stupid data or it's usually a headline that it takes to pretty much pull the market right back down. So just as fast as we went up, we can go right back down. And one of the things that I'm pretty sure I've said it, and maybe a few others, Tom, Avery as well, is that usually once you get that first impulsive move, like we kind of saw today with a strong gap up, strong continuation on FOMC, typically you get a second entry, second opportunity if you do end up seeing more continuation to the upside. So I'm going to look to basically see if we can put in maybe a higher low tomorrow. If we are looking for continuation, that kind of sets up for that second opportunity. For those that didn't get in on the first impulse up, maybe we end up getting that second buying opportunity for the next leg up higher in the broader market. So we're gonna look for that tomorrow. See if we put in basically a higher low, even if it is a red day tomorrow. And that's what you want to pretty much be noticeable about. Are we gonna end up putting in a lower low than what we've had the past day or two, or can we put in a higher low in which we basically set up for that next leg higher? All right. Other than that, though, I think let's see how GDP kind of sets up the market by open. I think we can go either direction. The fact that we ended up ripping so high and so fast, especially I kind of mentioned it on live this morning. I hate when we typically go so fast and so quickly within the first 30 minutes of market open. I usually hate that because you usually don't get advantage of those little morning 30-minute spikes unless you ended up holding or swinging calls overnight. And of course, in this environment, I was not going to do that with so many earnings on deck. We basically had three strong earnings that were overnight, and that's really why I did not want to swing. I was going to end up holding AMD calls overnight, which obviously I'm regretting now that I didn't. But the fact that we had earnings, we had the Google, we had Microsoft, and we had Boeing this morning, that was literally three catalysts that could either weigh us down or pretty much pull us up. So that's pretty much like pick your poison, basically. All right. But other than that, again, let's see what GDP does for us tomorrow. We'll be looking to see price action either direction, and we'll pretty much try to navigate us through this tough waters. All right. Other than that, though, I will see you guys on live tomorrow morning. We'll call it a day. You guys